Generally speaking, I do think that a threat to that growth outlook could be on the trade side. We've obviously seen some major port capacity constraints emanating from these general supply chain bottlenecks. These are very, micro in nature, and generally policy tends to respond best to top-down shocks, including, the Fed on inflation, et cetera. So I do think that that is a risk in terms of that bottom-up supply issues that we're seeing really globally and including in China.
Right, from anecdotal evidence, and I don't know how much have you gathered on this issue because it's clearly drawing a lot of interest. The port disruptions, the shipping disruptions, how badly can that disrupt supplies that go out from China to the rest of the world, especially the U.S.?
I think we're really all watching and waiting there. When it comes to these supply constraints, obviously we're coming out of the most severe economic contraction in modern history, and it makes sense that the supply disjointedness that we're seeing would also be among the most severe in history. So it really does come down to how transitory this will be, how much it'll feed into prices. Clearly, the Fed, along with the rest of us, is hoping that this will be transitory. And it also does come down to consumer tolerance for rising prices. As long as we see the employment situation improving and we do see wages hopefully starting to rise in the second half, I think that will help. But a major, inflationary shock is something that we're all watching. And currently the Fed's guidance about how transitory it is not fully believed by the market.
Right. What about the story around the digital yuan in China? I mean, we're seeing the yuan strengthen. We're looking at the PBOC step in and try to maintain some balance in the currency markets at a time when parallelly they are stepping up efforts to bring out the digital yuan. Firstly, how strong and widespread would the acceptance be? And can the digital yuan really displace the fiat currencies, the major fiat currencies of the world, starting with the dollar?
So just this morning here in Washington, the U.S. House Financial Services Committee hosted a hearing on the digital dollar and what it would mean. And a big theme that popped out to me from that was privacy, and specifically that trade-off between privacy and being able to track bad actors. Now, when it comes to China, China's clearly picked what side of that equation they're going to fall on, clearly going to sacrifice more privacy. But in the US, that's a huge issue. So I think if we pair that with other components, such as the need for legislative approval in the US, the fact that China has cleared cryptocurrency out of the way in terms of marketing a digital currency to its people, I think that China has fewer roadblocks than the US in terms of rolling out a digital currency. But at this stage, it's very early days, and I do think that talk about a digital yuan being a threat to the US dollar is a bit overblown based on what we can reasonably expect at this point.